Thank you so much for taking the time out and speaking with us. I'm going to start with the pharma space because good morning, that space is, buzzing today on the upside, and Cadila is the one that really spread the bonhomie after the approvals that they got from their Moriah facility. Do you think that now is the time to buy into some of these beleaguered pharma stocks, not Cadila, but the other ones that have been beaten down?
Yeah, thanks for the question. So I would say that while the pharma sector is going through some of the broader pressure points, what really is the overriding factor is the idiosyncratic issues specific to each companies, which is which is related to whether they are going through FDA plant issues, whether their pipeline is ready, where the cost structures are moving in terms of OPEX and R&D. So I think it's an aggregation of factors. Some of this is sector specific, but a lot of this is idiosyncratic. So to answer your question, Sonia, we need to be fairly bottoms up about this investing in the pharma sector. I think for fiscal 18, it's a year of reset when the profits and expectations are going to get reset for the sector. But having said that, there are some mid caps and some ideas which can still deliver good returns.
Okay, Samir, good morning. I know you won't talk stocks, but you're very bullish on healthcare. I think Apollo Hospital, for example, is your top pick in the entire Asian pack. What makes you so bullish on healthcare in particular? I mean, not just pharma, but hospitals and a couple of other sectors here.
See, for hospital sector, the sector has not done too well for the last 2 to 3 years, having actually done very well in the 12 years preceding that. So the last 2-3 years were the years of intense capex, when these companies were adding a lot of bed capacities. As a result of that, balance sheets got stretched, occupancies fell, and the operating parameters were all low. Now they have come to an end of this capex cycle, more or less. So over the next 3 years, we are going to see reversal of this, which is that the operating parameters are all going to improve. The occupancies are going to go up, efficiencies are going to kick in, and balance sheets are going to improve. So therefore, we think that the next 2-3 years should be good for hospital services. But just bear in mind that there's one risk factor, which is related to government putting some price control on the implants.
That's exactly what I was going to ask you, Samir. Good morning. In fact, we were told that this price control on stents is actually resulting in reverse medical tourism, with people moving out to get stents abroad. Is this something that you picked up?
Well, I probably would not subscribe to that, Lata, because, cardiac is just about, I would say, 10-15% of the overall hospital services revenues. And within that, also stenting is some part of it, not entirely. Okay. So I think medical tourism is pretty much here to stay. India offers excellent clinical outcomes at a very, very competitive prices.
Okay. Just coming back to that point we were making about some of these companies like Cadila that have done exceptionally well for themselves in an environment which is so tough. You guys have, an overweight on Cadila. We just spoke to the management a while back. Wanted your thoughts on your views on what the way forward could be, considering that Moriah is now out of the woods.
So, I would not talk specific, but it comes back to the same 3 points. Sonia, that first of all, whether the company is able to overcome FDA issues and have all these facilities in compliance. And the second thing is, when is your pipeline ready to fire? Even if your facilities are ready, because of patent expiration, court cases, etc., the time may be some time away. So that needs to fall in place. And third is your cost control. So whenever all the 3 stars gets aligned, that's when the companies would do well in terms of cash flows and hopefully the stocks.
Okay. Well, let me come to real estate as well. A lot has been made about the real estate regulator, but initially it would be negative, isn't it, with companies having to cough up money if they delayed projects?
Well, you're right. So RERA, to begin with, would cause a lot of implementation challenges. Just to give you a perspective, so there are hundreds of property developers here in Mumbai, and there are, I would say, a few thousand projects which are going on, and the regulatory authority will need to take all of these on board and then do the implementation of the rules. I think it's a big implementation challenge ahead of us, and these authorities do not have at the moment, enough people in place. So you are right. So we have already seen very weak launch trends, and new launches are very key to pick up the pre-sales. So all of this is going to slow down. I would say easily next 6 months are going to be difficult for the sector.
Okay, Samir, just getting back to pharma, and I know you won't talk stocks, but do you think the Cadila has shown that the sector can get over this US FDA issues, and in that case, over the next 2 or 3 years, maybe we could look at something similar happening to some of the other big sector stocks as well?
I would say so, Anuj, that like I said, the fiscal 18 is a year of reset when the profits, etc., get rebased to the new and a lower level. But the moment we move out to fiscal 19 and 20 and beyond, I think a fair amount of the fundamental building blocks for the sector are in place, which is a local market, which is other emerging markets, and then sort of reworking in the US in terms of complex generics and specialty. So all of these are in play, and the balance sheets are in pretty good shape. So I would say, looking beyond fiscal 18, the sector should continue to do well.
Okay, Samir, always a pleasure speaking with you, and these are the sectors that the